Climate Policy Initiative, and I will be moderating this webinar today. For those who aren't familiar with CPI already, Climate Policy Initiative is an analytical and advisory organization that works with governments, finance institutions, and businesses to drive economic growth while addressing climate change. This webinar will provide an overview of the green bond market in China and is part of a broader project supported by the UK Department for Business, Energy and Industrial Strategy and their Partnering for Accelerated Climate Transitions program. Donovan, if you could switch to the title slide, please. Thank you. As a reminder, there will be a second webinar in Mandarin for Thursday, 9 a.m. Beijing time. This broader project has 4 focus areas, including stock taking of the market, the transition from banking to capital markets, economic impact, and risks. Outputs from these other research areas will be available in the coming months. We are launching 2 reports in this webinar, a main report looking at the state and effectiveness of China's green bond market, and a second report reviewing the status of compliance with the monitoring, reporting, and verification system. Links to the reports are available for download on the CPI website. Finally, we would like to thank our research partners, International Institute of Green Finance, for collaborating with CPI on this project. To kick off the webinar, we will start with some introductory remarks from Wang Yao, Director of International Institute for Green Finance, and Tom Heller, Chairman of the Board and Senior Strategic Advisor at CPI. This will be followed by a 15 minutes presentation from Donovan, Manager at CPI San Francisco office. And finally, there will be a Q&A session for the last half hour in which all speakers on the slide will be participating. Some housekeeping rules. This webinar is being recorded and will be available within 5 business days. During the remarks and presentation slides, please feel free to utilize the chat box to input your questions, and we will work to answer them during the Q&A session. Now I will first hand over to Professor Wang Yao for her opening remarks.
Okay, thank you, June. Dear colleagues and friends, good evening or good morning. Thank you for taking time to join us in the discussion today. Welcome all the friends on the line, the ones during this hard time of global crisis. International Institute of Green Finance at Central University of Finance and Economics, IIGF, has had the great pleasure working with CPI and UK PACT on this project of the state and the effectiveness of the green bond market in China. In the past 4 years, the world has witnessed incredible growth in China's green bond market. Guidelines and standards are also made in time to regulate the market. Moreover, as we all cheered of, PBOC's draft of the new green bond taxonomy showed significant efforts to connect the Chinese market and international investors. However, due to our research, problems in transparency, MRV system, and consistency in standards still remain. So for China to meet its commitment to the Paris Agreement, it must mobilize an estimated 3 to 4 trillion RMB every year in green investment. Unless with greater ambition, the gap is unlikely to be filled. So I think we should try very hard to mobilize the green capital market. So I hope this project can bring forward to better discussion among policymakers, market practitioners, and think tanks, and also media. And all the dear friends, please join us during this discussion, and you are very welcome to ask questions after the presentations. And you are please feel free to share your comments with us. And I do think your insights matter a lot. Together, let's find better solutions to scale up green finance in China and mobilize green capital for a more resilient world. Okay, thank you very much. Jim.
Thank you, Professor Wang. Now I'll turn it over to you, Tom.
Thanks very much. I assume people will let us know if my sound is not working well. It's a pleasure to be here, even early in the morning, late night in China, with my colleague Wang Yao, who has been an excellent partner from the beginning, and we appreciate all the work that IIGF has done, as well as the support that we've consistently received from the UK government in order to do this work. Let me set the stage a little bit by reminding all of us where we were when this work has gotten started last year and what some of our ambitions were in undertaking this project, and to say something about the terrifically fast movement that is going on in the world in this field that we are investigating. The past year, certainly at the international level, as well as the enormous growth we've seen in these markets, green markets in China, has been chaotic as well as promising. There are all kinds of new products and various forms of rating systems that are exploding in the world of green finance. Some of them are indicative of the fact that the market is growing so fast. Some of them are indicative of the very different stances, the different ways in which green finance is viewed by stakeholders, by corporations, and by banks. But one thing is very clear and has been clear from the beginning, that whether we are talking about investors or we are talking about regulators, you need clarity, you need metrics, you need transparency if all of these green finance mechanisms are to work out. And in the end, it is really about financial systems. So when we begin to talk about China or the United States or the European Union, we always have to be aware that financial systems differ in these places. As one would say in China, it is a financial system with Chinese characteristics. That means that in many ways it may be the world's leader. In other ways, it may face challenges that are more locally situated than we otherwise would just automatically expect if the world ran on a uniform set of financial systems. So what I would say in order to get the discussions going and to set up Donovan's remarks on the report is that we can basically think about this past year and the work that we are looking at as moving initially from what I would call from before to after. Learning about what people said they were going to do with green bonds and what they actually have done with green bonds. It's a challenge to move from before to after, from ex ante to ex post. But at the same time, there has been other movement. We have increasingly moved from thinking about projects, green projects, to thinking about the behavior of whole organizations, of banks, of corporations, of different funds that are in the system. And I'd like to say a few words about that. And then finally, I think we are close to a stage where we are starting to move from thinking about organizations to thinking about whole systems, often at the national level. So I'm describing a movement within the world of green finance. And let me just say a few words about that to introduce the work that CPI is doing. When we started, we of course recognized, particularly in China, that most green finance was in the form of green loans from bank lending. We saw the movement into capital markets, particularly with the area of green bonds, which exploded so in China in the period after 2016. And of course, we understand that the Chinese financial system, like other financial systems, is moving, so that we see very important developments in terms of shadow banking and various forms of non-regulated financial institutions, or questions about self-financing that exist, often in a sector like the energy sector where you have deep regulation. There can be self-financing that's important. So the world of green finance is a complex world, but at the same time, green bonds are a terrific place to enter. And we entered, and Donovan will talk to us about this, thinking about the question of use of proceeds, which has always been an important part of green bonds. Transparency, reporting, monitoring, evaluation, essential for everyone who is involved in this field to have clarity about where the money is actually going beyond where it is announced it's going to go. And yet, at the same time that this is happening around the world, not just in China, questions arise about additionality. Some of you may have seen that question at the beginning, or about the fact that while you can certainly see green projects, there is a question of where those green projects fit within the larger investment patterns of banks or of corporations, which can be quite separate from the green bond line. And in that regard, I would just like to point everyone toward three things that have developed over the past year, which are attempts to understand where is it that firms or banks or corporations are going beyond the projects that may be properly cataloged as green projects. First, we have an enormous expansion of ESG work. In other words, we are starting to see the characterization of firms, whether it's on the basis of their current emissions or their pledged emissions, or whether they are doing R&D, but an enormous number of ESG rankings that are coming out asking not about projects, but about whole banks or whole companies who are doing this investing. Secondly, we have the rise of public regulation, trying to look at the behavior of firms. And China probably is as much in the lead here as anywhere in the world through the PBOC, asking of People's Bank of China, asking about the use of incentives for green and how they are tied to the issues of what the firm is doing. And now we have the emergence of an enormous number of new products, beyond green products. Perhaps the latest, some of you may have seen just yesterday, was the issuance of sustainability-linked bond principles, like green bond principles were a year ago. And here what we're asking about is, how does a firm, a company, a bank set KPIs or targets for their overall sustainability behavior? And again, how is this reported? How is this verified? How is this monitored? Because the question, of course, once again, will be ambition. How much of this is new? How much of it is simply relabeling what the firm was going to do anyway? So we started with a relatively simple set of questions, and all around us, the questions have gotten more complex. But this particular work in green bonds becomes really important for understanding how to approach the landscape. And I guess my final remark, I would simply say, I think we are also in a process of moving from thinking about how organizations and projects are performing as green to thinking more about how whole systems are performing. We see more and more the introduction of thinking about climate risk more generally, about the financial stability that of systems, national systems and regional systems. We think more and more about transition plans that are at the national level or even at the regional level to move from brown to green. We think more and more about this productivity of systems. Other work we're doing in China is not about how many renewable plants you can build, but how you integrate those systems to be a truly low carbon order. And now we have the added burdens of COVID. We have to think about the restructuring of debt, and we have to begin to think about the fact that public capital markets seem to be playing less and less of a role within the world's financial systems. Again, we probably have a lot to learn from China. So I hope that those remarks simply set up the importance of the work that Donovan and colleagues at IIGF will be reporting on, and understand that this work is situated in a much larger landscape of green finance. Many of the characteristics will be the same. Others will differ by country or by type of financial instrument. But this is absolutely the heart of where climate action is going. And I want to congratulate everyone who has been involved in this work on the quality and the ambition of the reports that they are about to discuss. Thanks very much.
Thank you, Tom, and also Professor Wang for your opening remarks. Now let's move on to the presentation, and I will hand over the floor to Donovan.
Great. Thank you, June. Thank you, Tom and Professor Wang. As Tom mentioned, it's been an incredibly interesting process to undertake this research. We've just seen this incredible growth in the Chinese green bond market, and we've learned a lot. And really, our aim was to unpack everything that's there and seek to understand what has really happened in the market over the last 40 years. So what we did here in the two reports, and again, you can see them we've posted a link in the chat. If you're interested in downloading them at the moment, you can have a look and see what we have there. But what we try to do is form a comprehensive understanding of the market. So we started by looking at transactions, basically. So we looked at every single transaction in green bonds in China that took place between 2016, right after the Green Bond Project Catalog was launched in 2015, all the way up to mid-2019, as well as the regulations, the actors that participated in the market, and the results in terms of environmental impacts and additionality. We organized the research around the 6 questions that you see there. So where is finance flowing? How is the market functioning? Who are the actors that are participating, and what are the incentives? Is there additionality? What actions can be taken to increase the effectiveness and impact, and what kind of data is available to evaluate green bonds. Green bonds are part of a broader framework of green finance in China. China has taken important steps towards greening its financial system. This is most notably demonstrated in the framework of the ecological civilization that was introduced in 2007 by the State Council and has been emphasized in subsequent 5-year plans. Under this framework, various greening strategies and principles have been adopted by ministries and other government bodies. The development of the green bond market fits within this. It's also important to note the scale of the green finance challenge in China. So as Professor Wang mentioned, it is estimated that between 3 and 4 million RMB are needed. This is roughly 420 to 560 billion US dollars per year are needed for China to meet its goals under the Paris Agreement. We know that we are still far short of these investments, even with this incredible growth that we've seen in the green bond market and other green financial products in China. We are still far short, not only in China, but around the world. Cumulative issuance surpassed 120 billion US dollars in 2019. This is a quadrupling in the size of the market since 2016, since the market was launched effectively. The market is now the 2nd largest in the world, representing 12% of global issuance. This trend has continued strongly and seemed likely to continue, but as we know, the impacts from COVID are vast around the world, and we know that the market has slowed remarkably this year. According to Dealogic, there has only been about 3.8 billion US dollars in 23 deals issued up until the end of May. And just as a comparison, the total amount of issuance last year was around 40 billion US dollars. So this is, quite a remarkable slowdown. But nonetheless, I think the market was in quite strong foundations, and it seems likely that as the world gets back to business, this trend will continue. This figure shows you the financial flows in the market, categorized by issuer type, bond type, and allocation sector, as defined in the Green Bond Catalog. financial bonds that are issued by banks and other types of financial institutions. Enterprise bonds are issued primarily by state-owned enterprises and traded on the interbank bond market. Corporate bonds are issued also by state-owned enterprises, but traded in the Shanghai and Shenzhen Stock Exchange, as well as private corporations. And then finally, medium-term notes, which are notes with 3 to 5 year maturity, issued in the interbank market. As you can see there, commercial banks and financial bonds have made up the vast majority of the market. If you look at the very right hand of the figure, you see there how those proceeds have been allocated to different sectors according to the categorization in the Green Bond Project catalog. We don't know where proceeds ended up in about 31 billion US dollars. And this is because these are from financial bonds, and for financial bonds, banks act as intermediaries. So they reallocate proceeds once the bond is issued. So they might lend capital to other projects. And so we don't have a full picture at any point in time on where those proceeds ended up, but we do know that they are required by law to allocate them in those different allocation sectors that you see there. You see there that clean energy and clean transport have made up the vast majority of the market. And I'll talk more about those specifically in a moment. At the subcategory level, we know that hydropower has made up the biggest share. China's Three Gorges Corporation has used green bonds to finance construction of several massive hydro projects that are at least 10 gigawatts each. So about 28% of proceeds at the subcategory level went to hydropower, and some of that to very large hydro projects. Within the pollution prevention and control category, we know that coal-related activities are featured there. It's not the majority of that, but there is a share there. So in the current Green Bond Catalog, and I should mention, it's very important to note that that is likely to go away with the new version of the Green Bond Catalog that was just released at the end of May. But in the current framework, clean coal is allowed under different categories, and specifically for the construction and operation of facilities that include efficiency-related improvements to coal-fired power generation, coal washing and processing, as well as resource utilization of coal mining and washing processes. This has been a very contentious issue for international investors. And as I mentioned, in the new version of the Green Bond Project Catalog, this is likely to go away. Urban rail transit has had a very important role as well. So we know that a lot of kilometers of subway and light rail have been built by different state-owned enterprises and local governments. Renewable energy has also played a very major role. There's a lot of wind projects and solar projects, as you see there. And then lastly is the ecological protection category that encompasses various different types of projects for the protection of the environment. Now we'll talk in a little bit more detail. So now we've reviewed where proceeds ended up, and now I'll talk in a bit more detail about how the market actually functions, the regulatory framework, as well as the different types of actors that are part of the market. So first of all, it's worth noting that there's a vast regulatory framework around green bonds. So as I mentioned, there's different types of bonds: financial bonds, corporate bonds, enterprise bonds, and medium-term notes. The regulation of these bonds is distributed amongst authorities according to different bond types. So each regulator provides its own guidelines. The two largest bond categories, financial bonds and corporate bonds, are regulated by the People's Bank of China and the China Security and Regulatory Commission. The third largest category of bonds, enterprise bonds, is regulated by the NDRC. Ultimately, this leads to inconsistent standards because each bond is subject to different regulatory body, different reporting requirements, and this provides a significant challenge for issuers and also for researchers, as we went through and collected data for green bonds, we saw that there's a lot of inconsistencies in the reporting requirements for each type, and also inconsistencies in the availability of data for each bond. And I'll talk more about that later. So this slide here shows differences between, and I'm not sure what happened, but somebody drew on the slide. If somebody from the team can remove that, be much appreciated. So in this slide, I mean, the key takeaway to see here is the differences. I mean, you don't have to look at this in detail, but there's vast differences in the regulation and MRV requirements for different types of bonds. The NDRC, as I mentioned, regulates enterprise bonds, but it has no requirement for issuers to report on the use of proceeds on or environmental impacts, whereas the PBOC, that regulates financial bonds, does have regulations and requires reporting on an annual and quarterly basis. All regulators encourage third-party verification, but for certain types of bonds, there is no such requirement. Now, naturally, this leads to differences in quality of reporting. This is an assessment that we did where we looked at 387 different issuances that provided reporting, and we graded them on a 3-point scale, or on a medium, low, high scale based on points, to understand the overall quality of reporting for the different bond types along different categories. So ease of finding information, the granularity of reporting, how environmental impacts are reported, etc., as you see there. And the key takeaway here is that you see vast differences in reporting quality. So overall, financial bonds have very high reporting quality, whereas enterprise bonds quite low. So this, ultimately impacts our ability to understand what is happening in the market, how the market is performing. And it's also an issue for international investors because there are vast categories in the market that are just not so well understood. There's ongoing efforts. I've mentioned already the issuance of the new Green Bond Project Catalog at the end of last month. So some of these issues that I've described are being addressed. So, one key takeaway there is in the new version, the use of clean coal is being taken away. I should mention that this is not final yet, that the Green Bond Project Catalog has gone out for public comments. It has not been formally approved, but it is very likely to be so. And so, I mean, one key change there is the removal of coal. And then another important development is the establishment of the Green Bond Standards Committee, which is going to be a self-regulating entity and coordination mechanism for green bonds. And this could significantly help improve the issues around coordination and regulation, as you've seen the differences between the different regulatory bodies. Now I'll briefly talk about environmental impacts and additionality in the market. So this is a significant effort that we undertook to understand what the aggregate impacts have been of the green bond market in China. So we collected data from just around 157 issuances that had publicly available information, and the aggregate impacts are what you see here. So effects have been significant. We know that green bonds have reduced about 52 million tons of CO2 annually. And about 11 gigawatts of clean energy have been funded through green bonds. We also know that about 3,000 kilometers of subway and light rail have been funded through green bonds. So overall, this is quite an impressive achievement in 4 short years. But at the same time, we know that more is needed. I should also mention that there is high uncertainty around some of these figures, as they are based on issuers' own reporting, and only a portion of these have been subject to external review. This is a clear area of improvement for the market. Once this happen, and we highly encourage this to happen, we can gain a much better understanding of the actual impacts that are being achieved. In this slide, what you see there, so I mean, we tried to understand the additionality of the market. And I mean, as you know, for those of you that might have explored this topic in more detail of additionality, I mean, it's something that is hard to define and much more difficult to measure. So, and you know, we knew that we don't have all the data that we need in order to undertake a comprehensive additionality assessment. But one of the things that we did is we tried to understand if there was, you know, some sort of proxy that we could use to understand, you know, how the market has changed over time, and you know, whether there is additionality there. So, one thing to remark here is that you see basically a clear change after the Green Bond Project Catalog was published in 2015. We have a baseline that we established, and that's what you see in red there in that figure. And the baseline is basically what we call unlabeled green bonds. So these are bonds that were issued in the market that were not called green bonds, but that would have fit the categories under the catalog. So, you know, clean energy projects, clean transport projects, those that were not called green bonds, that's what we would have called unlabeled. And that just gives you a feel for how much activity was happening in the market before the Green Bond Project Catalog was issued. And, you know, I should say that that activity still continues. There's still a lot of bonds out there that are not called green bonds, but are funding green projects. So that's what you see there in red. You know, that's what we call our baseline. And then in blue, as you see how activity changed once the project catalog was issued, and you see an overall increase in the amounts financed, and you also see an increase in the number of participants in the market. So our conclusions, so I mean, it's clear that there's been a very impressive ambition and growth of the green bond market in China. There's been significant investment in sectors like clean energy, clean transport, and environmental protection, but we also know that much more is needed. The investment requirements are vast, and you know, this is really just a very, very small fraction of that, and a very small fraction also of the overall green bond market. The market must expand dramatically in the coming decade in order for it to make a real contribution to China's green finance ambition. We're talking about factors of 5 or 10 expansion in the market in order to have really a very meaningful impact. The definitions and standards of green are continuously evolving. So we've seen that the PBOC has been responsive to some of this feedback on kind of what should be green projects, and we encourage regulators to continue to increase the standards and ambition for what should qualify as a green project under the Green Bond Framework. And finally, we know that MRV system is absolutely critical. You know, ultimately, this is just only as good as the impacts that it produces, and we cannot know that until we have a very robust and verified MRV system. So our recommendations, so the market, as I said, has clear potential for growth, and incentives can go a long way towards this. We've seen a lot of very interesting initiatives at the provincial level that have helped increase the market. Diversifying the issuer and investor base. I mean, as you see there, there's a lot of the market is made up by banks, state-owned enterprises. There's potential for growth there by bringing different types of actors into the market. I mentioned already the point on strengthening MRV systems and increasing incentives. So that takes me to the end of the presentation, and now we are very happy to answer your questions. So I see that people have been sharing questions in the chat, and now the team here will work to answer them. So I'll hand it back to June. Thank you.
Thank you, Donovan, and thank you to those of you for submitting your questions. As we move on to the Q&A and discussion session, I will first like to hand over the floor to Matthias to discuss the new draft plan for green bonds. We did have several questions related to that coming along, including how the new green bond catalog may impact the market and who has been releasing this. So Matthias, I'll hand over to you.
Yes, thank you for the question, June. I assume you can all hear me fine. I'm happy to be on the webinar today. Hi, everyone. So this is indeed a very hot topic these days in green finance globally as well as in China. So just to be clear, what we're talking about here is this new draft of the Green Bond Supported Project Catalog, as the full name is. So this remains a draft, as Donovan mentioned. So it's important to know that the contents that are in it now remain to be finally determined. So we don't talk about it specifically in the reports we're launching today, simply because our data is based on this standard that we have in place today, and because this new catalog is still a draft. So it is indeed a very interesting development, so I'm happy to say a few words on that here. And I can see there's already been a couple of questions on it in the chat. So to give a bit of a context, a key obstacle for developing green finance in China has been this problem with different standards in the green finance system, including in green bonds. This is a difference inside China between regulators and financial instruments, as well as between China and the most common global standards. So previous work has already taken place on this issue of green standard harmonization. So the NDRC in China last year launched the Green Industry Catalog, which will form a basis for many green standards to be developed in the future, and many of the current ones will be revised according to this. And internationally, the PBOC, together with the China Green Finance Committee and us at the Institute, has worked with the European Union, with the European Investment Bank on mapping and comparing standards between China, the EU, and other global standards. So it's an issue that we're already aware of from a Chinese perspective, and it's already done some things to deal with. So the purpose of this revision of the Green Bond Project Catalog is to address both of these areas, harmonizing the green finance standards within China as well as between China and the other countries. So what exactly is in this Green Bond endorsed project catalog and the implications? So first of all, it's jointly issued by PBOC, NDRC, and CSRC. So these are three regulators of the bond and the green bond market in China that are coming together, harmonizing their standard. It's also to a large extent compatible with CBIRC's green credit standard. So this means it has the potential to actually go beyond just green bonds. Now it's only a project catalog. It doesn't talk about verification requirements or disclosure, management of proceeds and so on. It simply lists the projects that qualify as green, that the use of proceeds from issuing green bonds can be used towards. So the differences in this one and the current previous version is that, for example, clean coal is out. The only fossil fuel left is LNG distribution. This was a big sticking point in the past, so this gets us a lot closer to the global standards. On the other side of that equation, passenger rail is in fact out of the new version, which is something that's included in most international green bond standards. Lastly, it is still worth noting that this is a draft, so there's a consultation phase now. So there might be some changes, though we don't expect substantial changes from it. So ultimately, we think it's a very positive development to have this revision going on these days. And we think it has great potential to really solve this obstacle of the different standards, both within China and between China and international standards.
Thank you, Matthias. So I think that gives a very good overview of the current developments in the market, as well as all the standardization work that China has been leading. So another group of questions that's been coming in has to do with the difference between the current Chinese green bond catalog and other standards, and how that compares with international standards, for example, with the climate bond standards and the international standards. I think I will first direct back to you again, Matthias, if that's okay, and also maybe Professor Cui, if you're available.
Well, I can say a few words. So first, as I mentioned, the issue of clean coal is out. So that already is a big step towards the international standard. This is not included in the MDB IDFC standards, in the EIB, and CBI, and ASEAN standards, and so on. So that alone is a big step towards the Chinese green bond standards being similar with the others. Now, there are some other issues where it still differs, which, as I mentioned, passenger rail is now not in the new version of the Chinese standard, though it is in most international standards. So it's definitely a step in the right direction, but getting complete identical standards, I think we're still far away from. Direct comparison with the other standards remain to be done from us at the Institute, but this will be done in the future as soon as we have the formal final new green bond catalog out. I don't know, Cui, if you have anything to add to that.
So we know what is happening and we know where we are going. So what I will do, I don't want to read.
I'm not sure who was just trying to speak, but Lin Cui, did you want to add a few words?
Maybe I can answer the questions about the draft plan of the new green bond catalog. I think this is a very great process on China's green bond standards harmonizing. The new draft plan, actually now it is only draft plan, so we are also waiting for the final one after consultations publicly. So I think all the audience, you are all very welcome to give comments on the draft plan. Now this draft plan unify the definitions and the scope of green project. So it now solves the problem of different standards in green bond market in China. We know before we have two green bond catalogs. One used by the except NRDC. There's Green Enterprises catalog, and other financial regulators, bond regulators, they used the Green Finance Committee's catalog in 2015. So how to combine these two green bond standards is always appeared from the market. So now this new catalog where unified the two one. And also, in China, for the financial issues, they are the biggest issue in the China's market. So especially for banks, and they always use the proceeds to in the green loan. But we have a green loan statistic regulation. So formally, these standards are all different. So now it seems because now the three catalogs, they are all based on the NDRC's Green Industry Catalog. So this is the basic catalog. All the other green bond catalog and green loan catalog are all based on this green industry catalog. So we combine this, and it's very good for the financial institutions when they do their business. And also it improves the quality of statistical monitoring, and also will in different sectors they may have their own policies on the green, just like a green industry and green forests, just like that. So this green bond catalog also combine all this. So it is also a good things. And the fourth point is that it is aligned with international standard, especially it includes all fossil fuel related projects, clean coal and some oil related projects. So this is to further establish a common language, just like Matthias said, common language for green bond in China and overseas. But compare now we do some compare. We haven't compared with CBI, but we use China's catalog compared with the EU's, because EU have a sustainable finance taxonomy. The sustainable finance taxonomy in EU, I think their target are the same with China's, because in China our green, when we define green, we have three targets. The first is addressing climate change. The second is environmental protection. The third is to improve the efficiency of the resources. And for EUs, they have six targets. addressing mitigation, adaptation, and biodiversity, and also environmental protection, and improve the efficiency of resources. So this is I think they may, for the, especially for the international investors, we should, they have some misunderstanding that, I think they have two questions. I will also ask you, is, do you think that they are where have a common standard in the world? I mean, in EU, in China, in every country, we will only use one green standard. To my knowledge, I don't think so. I don't think we will have a totally common language, but we can have some common language to understand each other. But due to every country, they have their own economy structure, energy structure. So in the different stage, maybe when we define the green, we will have some difference. For example, people may think that China's green definition may be much broader than the EU's. Actually, if you compare with EU's taxonomy and China's taxonomy, we will find that some green projects in EU's standard, but not in China's. For example, the passenger railway construction in China, we exclude that. And also for the production of electricity from hydropower, EU include all the hydropower, but China only large hydropower. And for the manufacturing of cement and steel in EU, it is in the list, but in China we exclude that. And also in EU, a production of electricity from gas. China, we exclude that, but in EU, there are in that. So they have some differences. I think, so what we can do is that to make people know, to make all the investors know, so improve transparency is very important. So I think in the future, we hope that all the international investors, they can know very clearly about China's green definition. And when they invest in China, they may use China's green catalog. But when China's entities, when they issue green bonds in overseas, we should also do that according to China, international standards. Okay.
Thank you, Ying Cui. I think along the way of your answer, you also address some of the other questions that have been coming along about green versus brown, and how we should consider China's green bond catalog and standards in relation to all these other standards. And of course, great to point out that once again, there is no harmonized international standard as of yet. The EU Sustainable Finance Taxonomy has been one of the most recent achievements of attempting to reach a consensus on a green taxonomy. And of course, climate bond standards has been trying to set a scientific standards for each sector based on what is internationally aligned and not aligned, but also keeping in mind that the international standard is always shifting and evolving. There was a question about regulations on how the inconsistencies introduced by the multiple regulatory agencies should be addressed, and whether there is a central agency that should take the lead on this. So I'm going to turn over to Donovan to first comment on this one.
Yeah, so in terms of the regulatory agencies, so I mean, as we've seen with the new catalog that was, the new version of the catalog that was just announced at the end of May. Yeah, I mean, certainly a central regulatory entity would be very helpful to coordinate regulations. We also think, and that's something that we talk about in the report, but you know, a way to collect and centralize the data that is made available for green bonds So, I mean, for us, I mean, we went through a huge exercise to collect the data that you see there in the report. It was very challenging. It's not normally made available on any websites. It's not centralized. You know, as we've mentioned, there's differences in quality. So having an entity there that is able to bring together data, make it available to the market, both for investors and researchers, we think could go a long way towards increasing transparency and trust in the market.
Thank you. There's also a question about the current context of green bonds under the COVID pandemic. So under the impact of this epidemic, the global market is under great economic pressure, and Moody has lowered its forecast for issuance of global sustainable bonds. And how do we think this impact will continue on the global green bond market? So for this question, I would like to turn to Tom and Professor Wang, if you have any remarks for this.
Sure. These are obviously critical questions. Let me use an example to begin to answer that question, and build on the remarks that Yao Wang made a few moments ago about uniformity. I mean, what we see happening globally is that within the green finance world itself, we see a proliferation of different products. So we see an issuance in Europe now of things that are called transition bonds. And we see the increasing issuance of these sustainability linked bonds that I described earlier. So we not only have an evolution of the standards of green bonds, but we have multiple types of bonds that are being issued, all of which seem to have some relations to the transition between high and low carbon energy systems. And we have the same issues that Donovan described for each new type of bond, namely verification, what is additionality. But we see an increasing number of these bonds. So let us take something like clean coal, okay, which has been recently in the new draft of the Chinese catalog, eliminated from green bonds. But that doesn't really take care of the overall problem, in the sense that if China were to begin issuing transition bonds or sustainably linked bonds, it could be quite possible that in those areas, various types of uses of Chinese coal plants for purposes of flexibility, that is to say, used when power is not available from various forms of wind or solar or other truly clean power is not in the system. It could be that it makes great sense, particularly in some areas of China, to use coal relatively more flexibly. So accepting the idea that we will have variability from nation to nation, depending on its resources, depending on the nature of its fleet, the real question is, how does one navigate this transition? And there are a whole series of new financial instruments, all of which need clarity and verification, that are starting to emerge in the West that could well emerge in China. So the problem is even more complex than simply thinking about a single central regulatory agency. That said, it seems to me that everything that we are looking at has to be understood in the macroeconomic position of a massive creation of public debt that is funding, certainly across Europe, certainly across North America, to a lesser degree in China, because the macroeconomic position has been differently handled under the so-called Chinese stimulus recovery plan. And so what we have to do is begin to tie together the micro side of the regulation of what is green, what is not green, what is transition that is real and ambitious versus transition that is not real and ambitious. We have to tie together the micro side with the macro side that the questioner was asking about. And it seems to me that the only way to really do this is to continue to do as much transparency in the private markets as is possible, but to understand that we do need public regulation of these sectors to a greater degree than we have, to tie together both all the different kinds of private financing, and second, and to the overall levels of debt, and to the questions of the debt restructuring that is going to happen because of the levels of debt that are necessary to deal with the economic slowdowns or recession, whatever we choose to call it, that will be with us for the next decade or so. So my own position is we will have to see more and more regulatory structures that tie together the macro side of this to the micro side. And I would expect that within that context, there will have to be a good deal of the kind of work we see in China, where you have the People's Bank and the various financial authorities working in relatively close proximity and constant engagement with the various transparency devices and monitoring devices that we are seeing at the micro level. The two simply cannot be separated any longer.
Thank you, Tom. So we are at the end of the hour, and unfortunately we will have to close this discussion. For those of you who have remaining unanswered questions, please feel free to reach out to us at CPI. I am leaving my email address as well in the chat box. And please do stay in touch with Green Bonds. A final word of thanks to our funders, UK Base and the PACT program, and our collaborators, IIGF, on this research project. This concludes the webinar. Thanks everyone for joining, and stay safe.
Bye. Thank you, everybody.
Thank you.